Good morning guys, welcome back to our channel. So in this video we are going to look at what is golden cross and what is death cross. So what is golden cross and what is death cross? Golden cross is nothing but a smaller time frame moving average crossing over the larger time frame moving average. Crossing above the larger time frame moving average is called as golden cross, which is called as 50 days moving average crossing over 200 days moving average is considered as a bullish signal, and a rally will be expected past that. So you can go and check in your chart that you can just plot 50 days moving average and 200 days moving average and see whenever a 50 days moving average crosses 200-day moving average, then you can see after that a huge rally has happened. You can check in that. And But there are sometimes like when the market is in range bound, there are sometimes certain times like the 50 days moving average crosses on the 200 days moving average, but then it is like just like hovering around that. It doesn't work in the range bound market, but in a trending market, whenever a 50 days moving average crosses 200 days moving average, then it is considered it as a golden cross. So the next one is like death cross. Death cross is nothing but the same, but a 50 days moving average crossing below the 200 days moving average is considered as death cross. So why we are seeing this at this time? Because we are in a bearish market. We are almost out, I mean like over completed the bullish market, and now we are in the bearish market. There are certain sectors which are getting into the death cross. I just want to notify you guys, the people who are holding their portfolio, existing portfolio, they can just get their clarity on that, whether their stocks or their sector which they are focusing on or focusing to invest now, whether it is in a death cross or a golden cross, where it is. So just for this learning purpose, I'm giving out this video. So let's get into the video. First, for that, I will add the two indicators, 50 days moving average and a 200 days moving average. You can go and type it as moving average 1, 2. So I had added two moving averages in that. So by default, it comes as like 9 days moving average. I'm just going to change this as 50 days. And sorry, I will also change the color on that. I will change it into green. I'll change it into green on this color. I'll move it into a dark color. Yeah. And next one, I will move it. I will change this into 200 days. You can just go here and type 200 and change this into red. Yes. So now you can see I had changed this. You can see I will show an example for a I'll show an example for a golden cross, and then I will move to the death cross. So this is Nifty metal sector. So you can see this is a 1-day time frame in investing.com. You can see the last time it has crossed, I mean like the golden cross happened is around 2020, which is like September month. September month it has crossed, I mean like the 50 days moving average crossed the 200 days moving average. I think you can see here. I'll notify. Sorry. You can see here 50 days moving average is crossing, and then after that a huge rally happened. So whenever the rally happened and whenever the profit booking came, it took support around the 15 days moving average, and then it started moving. So whenever a person enters here a golden cross, then he can just travel through this entire rally, and he can keep the stop loss as 50 days moving average, or whenever or if he's on worst phase, he can keep the 200 days moving average as the uh, stop loss. So you can see a person who entered here at this area 2343, then it started to move up, and then currently it is at it moved till 6800, close to 6800. So you can see 50 days moving average was acting as a cushion, and then it started to come close to 200 days moving average, and a person can exit here. So this way a person can easily identify whether a sector or a stock is in a bull market or a bear market. So now, as you all know, market is getting crashed due to many issues like Ukraine war issue, inflation issue, Fed issue, Fed rising the interest rates. So now let's move on here. Just a second. I will show you the latest situation here in the latest pattern forming here. So now after a continuous bull market, now now the Nifty metal sector has just crossed 200 days moving average and started to sustain below that. And what is happening here is, you can see here, there is a there is a death cross happening, which means that market, I mean like the metal sector, is entering into a bear phase. I mean like a confirmed bear phase. What does it mean? It is a complete bear phase now, and people have to be cautious just to give any entry now in the market. So if you keep identifying these kind of simple signals in the market, this will be a very helpful to sustain in the market. So you can just go and add you I mean like plot this 50 days and 200 days moving average in your chart, and you can check what are all the stocks which are getting into death cross and what are all the sectors getting into death cross. Or else you can just go to any of your screeners like charting screener, or any private, I mean like any paid subscriptions provided from the any of the I mean like known screeners like Stockage and Market Pulse. If you go and check there, you can just go and check what is happening. I mean like what are all the stocks or the sectors getting into the death cross. So you can easily plot and identify whether this stock is I mean like are we good to enter now, invest now, or is it good to avoid for time being. So this is what I was trying to give in this video. So hope this gives you a clarity. So if there is any doubts or any clarifications needed, you can just post that in the comment. I will give a clarification. Now let's also see any other sector. Now I'll go to Nifty Pharma. So Nifty Pharma, it has already it started to sustain below the 200 days moving average. The cross has happened. Let me see. Yes, the cross has happened in the month of last December itself. After that, it tried to cross it, but you can see this 200 days moving average is acting as a resistance. So people, what they will do, so if they did not get a sell entry here, what they will do is like wait for the entry here in the 200 days moving average. So when it hits there, people will start giving selling. So that is what happening in the Nifty Pharma now. Let's also see Nifty Bank.